Okay, so let's work through this ICP 2.4 here for Creets Manufacturing Company for the year ended December 31st, 2020. This looks like a lot of information, but it really isn't that bad and shouldn't be overwhelming. But what you want to do basically is first kind of categorize the information that you have, and this is a good review for what we just covered in class regarding the different kinds of costs. So I'm going to use a blue pen here, and I'm going to say, well, these are all the work in process, beginning and ending inventories. And then we have the direct materials. These are also inventory amounts. And then we've got the beginning and ending inventory for finished goods. And then what we have are direct materials purchases, right? We know what those are. So this is DM. Then we have a direct labor, DL. And then we have to determine of these items that are left, which ones qualify to be categorized as manufacturing overhead. So let's do this in orange. The supervisory and indirect labor, this is manufacturing overhead. Now the administrative salaries are not, and that's actually a period cost. So we'll use pink here, we'll make sure that this is a period cost. If we look at the supplies and indirect materials, that's also a manufacturing overhead. And then when we look at the heat, light, and power, 70% is for the plant manufacturing. And so we would say, well, times 70% is manufacturing overhead. Amortization, 80% of that relates to manufacturing. So we'll multiply this by 80%. And we might as well do the mathematics on that here. The utilities times 70% is 22,120. And then the amortization is going to be 30,000. And then finally, the property taxes, 75% of that belongs to the manufacturing plant. So all those are MOH. So this is times 75%. And that is 74.25. And so these are all manufacturing overhead. And then the last two are administrative and marketing costs. Those are selling and administrative costs. And so both of these will be period costs, right? Remember, period costs are expensed in the period that they're incurred, and all the other costs then are product costs. So what we can do first is illustrate using T accounts how all of this works and how the cost flows work, and then you'll have all the information you need to prepare a formal schedule of cost of goods manufactured or income statement. So we're going to have 3 T accounts. Direct materials, DM inventory, has a beginning balance of $21,400 and an ending balance of $19,800. What we know is that during the period, we purchased $32,400 in direct materials. Now, $21,400 plus $32,400 does not equal to $19,800, which means there needs to be a credit in this T account, right? Left side debits, right side credits. And what we can do is, when you do the math, that works out to a credit amount of $34,000. And this must be the DM used. So then we set up our second T account. I'm going to change my pen to blue, and I want to deal with the work in process now. So work in process also has a beginning and ending balance. The beginning balance is $19,000, and an ending balance is $15,600. And we know that from the direct materials, we have DM of $34,000. We also have the direct labor of $52,000. And then finally, we will have manufacturing overhead. And I'm also going to set up a T account just down here for manufacturing overhead. Now, this is not an inventory account. This is called a control account. That's basically a temporary account that we use to track all of the actual costs that come in on the left side. So we could say the left side are actual costs. And then on the right side are the allocated overhead costs that go to work in process. Of all of the numbers that we have in orange, we will have the supervisory and indirect labor of 23,700. Then we have the indirect materials of 5,400. And then we have the power and utilities is 22,120. And then we have the amortization, which is 30,000. And then the property tax, which is 7,425. All of those add up to 92,245. And in this simple example, very early on, because we haven't gotten the job costing quite yet, we're going to want to have all of that allocated to work in process. So we're going to have one big credit here, 92,245 is the manufacturing overhead, which will go right there. So when we do our math, the beginning WIP inventory plus materials, labor, and manufacturing overhead, well, that doesn't equal 15,600. There's something missing. And so there's going to be a credit missing in this account as well of 181,645. That is cost of goods manufactured. And then finally, our last T account, which we'll do in green, is the finished goods inventory. And if we look at our data again, all I have left for my inventories are these two finished goods items. So 36,700 is the beginning inventory, and then the ending inventory is 13,600. And from the work in progress, we have cost of goods manufactured of 181,645. Well, again, beginning inventory of 36,700 plus the cost of goods manufactured is not equal to 13,600. We have another credit that's necessary. And so if we do the math and plug the account, 204,745 is going to be the cost of goods sold. So this represents the cost flows of all of our inventories. And then now we have all the information visually to help you prepare the schedule of cost of goods manufactured and then the income statement. The nice thing about this is that rather than relying on memorizing how to prepare these schedules, if you look at the T accounts and work through those and see that they all work, then the rest is pretty straightforward. So basically all we have to do now is a schedule of cost of goods manufactured first. The name of this company here is Crete Manufacturing Company, and this is a schedule of cost of goods manufactured. We like the in good form, write a title, for the year ended December 31st, 2020. So what we do is we start our cost of goods manufactured. You can either start, the example that we saw in the text started with the work in process and then had the work in process at the end, or we can deal with it like this, where we have the three particular elements where we have the materials, labor, and overhead. Okay, so I'll do it this way, where we start with a section for direct materials. We have direct materials inventory on January 1st, which is 21,400. And then we add direct material purchases of 32,400. And then we will subtract less direct material inventory at December 31st. So 19,800. So that means our direct materials used are $34,000. Then we'll have a line for direct labor. That one's easy. There's only one number, $52,000. And then we'll have a section for manufacturing overhead where we will list all of the applicable overhead items so that a manager can see what the overhead is line by line. So we have supervisory and indirect labor, 27,300. We have supplies and indirect materials for 5,400. Then we have the heat, light, and power. I'll just call those utilities. Remember, we calculated our 22,120, which was our percentage. And then we have amortization, 30,000. And then we had the property tax, 7,425. That equals 92,245. And when we add all those together, all of those numbers give us total manufacturing costs. So the labor, the materials, and the overhead are manufacturing costs, 178,245. And then what we do is add work in process at January 1st, which is 19,000. And then we subtract the work in process at December 31st for 15,600, and that will give you cost of goods manufactured of 181,645. It's important to note here that in the text, if I go and look at the schedule of cost of goods manufactured, you see here they included the beginning work in process up top instead of down at the bottom. So we could have put this work in process up here in which case all these other numbers and all this other work would still be the same, and then you could have a subtotal that was the cost to account for less the ending work in process. You get to the same number. So there are a couple of different ways that you could prepare the schedule. And then finally, our last statement that we need to put together here is our income statement. Crete Manufacturing Company income statement, year ended December 31st, 2020. Same idea though, but now we include the accounts that we have left over. So we have sales of $325,000. We have cost of goods sold, and we have a section for that. Here's where we include our inventory information. So finished goods inventory at January 1st was $36,700. Then we add the cost of goods manufactured for $181,645. You see this right here comes down over here. This gives us cost of goods available for sale. You could see that sometimes. So the sum of those two is $218,345, and then less finished goods inventory at December 31st of $13,600 will give us $204,745. If you recall from your previous course, sales minus cost of goods is gross margin or gross profit. And so $325,000 minus $204,745 is $120,255. And then we have a section for operating expenses. And this is where we include all of our period costs. And so if we look at all the period costs, so we've used up the sales. And so what we have left then are the administrative salaries, the marketing costs, and the administrative costs, but also the other percentages of the utilities, amortization, and property taxes. So 70% was overhead, 30% is a period cost. Here, the amortization, we have 20% period cost, and the property taxes, 25%. So we will list these in any particular order. Sometimes we can do them in alphabetical order, highest to lowest. For our purposes, it doesn't matter. We'll get the ones that we don't have to calculate first, and then we'll do the rest. So we have the administrative costs, which were $10,950. And then we have the admin salaries, which were $43,000. There's marketing, which is $42,600. And then we have utilities, which was that other 30%, 31,600 times 30%. So that's 9,480. We had amortization. The total was 37. The administrative part of that is 20%. So that's 7,500. And finally, the property tax was 9,900 and multiplied by 25%. So it's 2,475. So all of those admin costs, operating costs, add up to $116,005. And then finally, that will give us our operating income of $4,250. And we are now done with this particular problem.